Hello and welcome back to Trading Club 7U. Today, I'm your lead educator in tackling the bearish engulfing candle in this Candlestick Masterclass. Imagine you're driving through a stormy weather. Your speedometer can either be high when the roads are clear, or low when visibility is poor. That's roughly how a stock's price can move in relation to a candlestick. In your driving scenario, the speedometer needle can fluctuate between high and low readings. This principle applies to a candlestick as well. Its open, high, low, close values fluctuate with each trading session. A bearish engulfing candle occurs when a smaller, red candle engulfs the entire body of a larger, green candle from the previous session. To explain simply, imagine this as the smaller, red storm of a bearish market completely covering the larger, green sunshine of an earlier bullish market. This happens when short sellers dominate buying forces, causing a sell-off. Let's use a real-world example. Suppose the stock price of XYZ company closed at 50 on Monday. Then on Tuesday, a large green candle formed with a close of 55, showing a gain of 5 in the stock price. The buyers were strong, pushing the price up. But on Wednesday, a smaller red candle formed, closing at 45. This candle engulfed the entire body of the green Tuesday candle. In this example, the price has now decreased by 10, reflecting the dominance of sellers. The smaller red candle just confirmed the bearish trend that started earlier in the session, making it a bearish engulfing candle. One common beginner mistake is misinterpreting a bearish engulfing candle as a bearish reversal. The reality is that this candlestick pattern occurs after a reversal has already taken place. The engulfing candle just solidifies the bearish direction that started earlier in the session. A savvy trader recognizes the difference and uses this candle as confirmation of the bearish trend rather than the trigger for their trade. To further understand this concept, let's examine what's happening in the market. When a larger green candle forms, it represents a bullish momentum. When a smaller red candle engulfs that green candle, it's as if the buyers, who were strong on Tuesday, lost steam and couldn't maintain their grip on the stock price. This lack of buying power allowed the short sellers to push the price lower, resulting in the bearish engulfing candle. To practice this skill, I recommend that you review your demo chart or paper trading journal and complete a homework assignment. Homework exercise. For a given stock, let's say ABC Inc., try to find instances where a bearish engulfing candle appears after a clear uptrend. Look for evidence of a previous bullish trend and a reversal in sentiment. Then, analyze the chart to identify any signs of buying exhaustion before the bearish engulfing candle occurred. For example, you might be looking at a chart of ABC Inc. and notice a series of higher highs and higher lows over the past week. However, on the most recent trading day, the stock price fell significantly, forming a small red candle that engulfed the entire body of a green candle from the previous day. Upon reviewing the chart, you observe that the RSI Relative Strength Index, or Bollinger Bands, had reached overbought levels earlier in the week, indicating buying exhaustion. This is a clear signal that the previous bullish trend was losing steam, and the bearish engulfing candle simply confirmed this downward trend change. In closing, let's recap the main points from today's lesson. A bearish engulfing candle is a reversal pattern that occurs when a small red candle closes below the body of a larger green candle from the previous session. It's essential to distinguish this pattern from a bearish reversal, as it represents confirmation of an existing bearish trend rather than a trigger for entry. Remember, trading involves risk, and there are no guaranteed profits. To succeed, it's imperative to practice and refine your skills on a demo chart or paper trading journal before risking your capital. Don't forget to subscribe to Trading Club 7U for more comprehensive lessons on mastering candlestick analysis. In the next lesson, we'll dive deeper into other essential candlestick patterns that can help you make informed trading decisions.